Snowflake. Joining us now is Brent Thill from Jefferies. He has a buy rating on both these stocks, I guess. Brent, you mentioned for Snowflake going into the numbers that, a lot to like, but much to prove. So did these results prove much to you?
Hey, Mike. Yeah, they proved it on the backlog growth. They beat by $70 million, but they flowed $100 million through on the raise. So if you look at, they raised more than the beat. And the narrative going into the quarter was that Databricks was crushing them, and Databricks is no doubt the leader in the industry. But it got just overly negative that Snowflake was going to be the big loser in infrastructure. And the way we look at it, the Snowflake's a huge winner in AI. You have to stage and manage your data to get AI ready for the enterprise. And they're using all the LLMs natively, Google, Amazon, all the platform stories are using their technology to leverage AI in the Snowflake system. So an incredibly negative bent from many of our institutional clients going in, and obviously the fear of software decaying while the rest of AI infrastructure is booming. So we've seen this now with Datadog. We've seen it with the Google infrastructure print. I think we're starting to see a separation in software, which is not all of it is going to get AI roadkill. It's effectively, you're seeing the infrastructure names really thriving, and that is key to our positive thesis on software infrastructure, which is they benefit the application companies like Salesforce, Adobe. Many of the app companies are effectively under duress because of AI. And so I think going forward for Snowflake, we still believe stock has more upside because of this gravitational pull to create agents.
1/2 put back ratio, which means I went out till July 31st, which, by the way, they have earnings July 29th. So I'm buying premium into the earnings event. Why? Well, it's very possible between now and July 29th, volatility may go up. So I'm buying implied volatility, selling one of the 400 puts, buying two of the 360 puts, and I'm doing that, Diane, for a $9.90 credit. So now, what did I set up here? I'm short a put vertical, and then I'm long an extra put. So if Microsoft were to go to significantly lower, I'm long an extra put that theoretically can be profitable down to zero. The kicker is, and this goes against the bearish theme, is if this stock were to rally past $390 and towards 400, I'm also profitable on the upside, Diane. So I'm profitable in either direction. Where I'm not profitable, if it goes to my long strike, which is $360, and sits there after the earnings call. That's where this position loses money. So it's a risk to find, but it certainly it needs movement in either direction. Down would be more money, but you're also profitable on the upside, Diane and Ben.
Did we twist your arm to make you bring a bearish example trade here? It feels like it. I see you came into this one kicking and screaming. Ben, thought from you or analysis on Kevin's example trade before we get into yours?
Well, I kind of knew that Kevin was going to go that way because I know Kevin's nature because we teach this stuff quite a bit out on the road. And so I took the rare opportunity to maybe steal a little bit of his thunder. He kind of pulled that switcheroo on this trade and added that back ratio spread. So he gets the advantage of both that bullish potential to lock in some of those gains if it does go up. And then that really almost, you think about it, it's not unlimited gains if it goes down, but it is theoretically unlimited gains, assuming that Microsoft goes to zero, which it's not likely to do. But you're right. He's got a very, very narrow range here in which on this trade, it runs into that max theoretical loss. And so upside or downside, I like that idea. As Kevin often says, I'll steal his thunder once again. You can be wrong and still make money in the trade.
Okay, let's get into it. Your approach, though, what's the example trade?
Well, I thought the same way. I borrowed Kevin's line and said, hey, I want to be have that potential to be wrong and still potentially make money in the trade, but still looking at a little bit more aggressively, directionally bullish trade here. on this bounce off of support right around that 356 or 357 level. So I went with just a shorter term short put vertical spread, which has a bullish directional bias to it, but it also gives the opportunity to make money if the stock just does nothing and goes sideways here, as long as it stays above that short strike at the 355 level. In this particular case, implied volatility on the stock is up in the 85th percentile. In the near term, so I'm going out to the July 8th expiration, which is a midweek expiration, not all the way out to the earnings announcement. With implied volatility as high as it is now, a decline in that implied volatility, we still have enough time to go where this is Vega sensitive. Implied volatility coming down may benefit this trade. It's collecting theta or time decay as it goes forward. So even if the stock doesn't do anything, this has the potential to make a little bit of money. If it goes up, it has the potential to make a little bit of money. And if it goes down, we're still at a defined risk level. But it's already...
Why the market still be underestimating the next phase of Nvidia, memory and the AI? One of the biggest questions investors continue asking is simple. Has the AI boom is already peaked? Or are we still in the earning inning? After listening to multiple analysts, semiconductor executives and Micron latest earning calls, one conclusion has become increasingly clear. Most industry leaders believe we are nowhere near the end. The AI infrastructure build-out is far from the finished. Several analysts now estimate that AI infrastructure spending could reach trillions of dollars before the end of this decade. Why? Because AI adoption is still incredibly early. Today, the largest buyer and are hyperscalers like cloud providers and AI labs. But that's only the first phase. The next wave includes enterprises AI, government infrastructure, sovereign AI projects, healthcare, manufacturing, financial services, robotics, automation systems. Every new industry adopting AI requires additional computing infrastructure, and every new AI servers require memory. Memory has become the bottleneck. For decades, processing power received most of the attention. Today, memory is becoming equally important. Modern AI models need enormous amount of memory simply to operate efficiently. Without sufficient memory, GPUs spend valuable time waiting for data instead of processing it. That reduces overall system performance. This is why high bandwidth memory has become one of the most valuable components inside every advanced AI servers. Supply cannot catch the demand overnight. One misconception is that manufacturers can simply produce more memory. Unfortunately, semiconductor manufacturing doesn't work that way. Building a new memory fab takes years. Construction, equipment installation, qualifications, yield improvement, customer certification, every step requires enormous time and capital. Even after spending tens of billions of dollars, production ramp gradually. This is why many industry executives continue expecting supply constraint well beyond the 2027. AI demand continue to expand. One reason analysts remain bullish is simple. Demand isn't coming from only one customer anymore. Every quarter, more industries adopt AI. More enterprises deploy internal AI, and more government launches sovereign AI initiative. More developers build AI native software. Instead of demand becoming concentrated, it's becoming diversified. That generally creates a stronger long-term market. Nvidia still sits at the center despite the increasing competition. Nvidia remains the foundation for the most advanced AI infrastructure. The company doesn't simply sell the GPUs, it delivers an entire computing platform. CUDA, networking, NVLink, inference software, AI libraries, developer tools, system integration, all of these pieces work together. That ecosystem creates switching costs that are difficult for competitors to replicate quickly. Custom AI chips are growing, but so is the market. Investors frequently worry about custom chips built by Amazon, Google, Microsoft, and the Meta. Those products absolutely matter, but they are solving specific internal workload. Meanwhile, the overall AI market continues expanding at extraordinary pace. If the total demand doubles or triples, multiple semiconductor companies can grow stimulatively. Markets